Hey, this is Kehinde Fawumi. You're listening to the Unleash Your Genius podcast. So, considerations you can have for structuring the deal, because we're talking about the business that could worth, I don't know, 500,000 US dollars. We're talking about 1 million or 3 million or big deals right now. And one concept that you want to keep in mind is seller financing. So, because up until now, you're probably thinking that if you want to buy a business, the money should come only from the buyer, but not at all times. You can schedule or structure the deal in such a way that you get the seller to finance it as well, especially if the seller is especially motivated. I give you three examples. You can use the cash flow of the business to buy the business. For example, the business is making 200,000 US dollars annually. Just give that example. In the year, at the end of the year, the profit, and it's been stable over, I don't know, 5 years, that the business makes 200,000. So without you doing anything, in the next 5 years, the business will make that money. Now, if you want to buy the business for, let's say, 500,000, you can reach an agreement with the seller to say that, okay, I own the business, but the profit from the business, 100% of it goes to you for the next 2.5 years, which is a total of 500 US dollars. And that's how you pay the seller. So you don't need any money down, to buy it now, to pay the 500,000 US dollars now. But then the seller will say, okay, I'm fine. I don't need the big cash now. I'm fine with getting all the profit for the next 2.5 years, and all the money is paid. That's one option. And many people have done that actually. The other one is that usually when you buy a company, you get, 100% of the shares, especially if it's not traded publicly. You can offer part ownership, in terms of shares to the seller to say that, okay, I know you care so much about this business. I still want to offer you 30% of the shares, so that you believe in my ability to grow this business. I want it to grow with you as well. So the person doesn't have to do anything; just owns shares of that business. And if you can convince the person that this will actually, lead to a bigger, company, you would make it boom, you'd make the company more successful and the likes. The seller can actually agree to that. So you can offer shares, but it means then that you reduce the capital investments, how much you're buying the business for. So the seller could agree to the fact that, okay, now I want to say that 500,000 US dollars, but if you give me 30% of the shares, then I can sell it for 200,000 US dollars, something like that. I can have a deal there. Also, you can find out what the seller cares about the most, and then offer that. It could also just be that the seller just cares about the employees. That I'm sorry I have to leave, but really I've worked with these people for 15 years. I can't let them go. So it doesn't want someone that wants to come and then lay off all those workers because you are aggressive. You want to you want to grow the business. So you feel like, okay, I lay off the people. I get new set of people in and all that. So it could be something that puts off the seller, and you want to listen and get all those kind of details. So these are conversations you want to have when you structure the deal, just so you know. And there are more things you can think about structuring the deal. But again, let's keep it quiet here. Please work with an expert in the field. Work with someone that already is there. That's a business expert. That's an expert in business acquisition. If you want to go in this direction, of course. But just to mention that you can also leverage the business assets as collateral for loans in raising capital. So if you want to buy it at 500,000 and you want to get a credit from the bank for that, usually you need to be able to prove to the bank that you can pay back or you have some kind of collateral. And usually it's doable to use the assets of that business as collateral, which means that you don't really need to have a lot of money, before going to the bank. You just can tell the bank, okay, this is what I'm buying, and the business itself has this asset, and you can use that, as collateral in raising the capital with the bank or any other financial institution. The steps is that, of course, you want to know what industry and other criteria. Especially, I would do something in the IT space or e-commerce or anything IT related, because that's my biggest stuff, basically, or something in entertainment, because I also have a lot of experience there. Two, find a seller who wants to sell. And I already talked about looking for motivated sellers. In finding sellers, there are so many online platforms. If you just put it on Google to say that I want to buy a business, whatever kind of thing, you would get so many examples and so many sites that are dedicated to this, and they will tell you what the revenue of the annual revenue is, what the annual profit is, and all this kind of information. You would have it there, and that's important. And then the third thing is the core part: study the business. Study the options that you have and make a decision. For this, you have some kind of legal help. You need some kind of accounting help because you want to look into the books and see that nothing is hidden somewhere and all those kind of things. And that the company is actually not going bankrupt and they're hiding some details from you. So these are things that you need some kind of, experts, to look into. And that's why I also would say that you try and work with someone that is already into that. You need to be able to read accounting statements, for example, and all these things, because that would help you in making your decision on what business to buy or to go for. Again, a lot of options are available for you. The question is, are you the right person for those businesses? 4, structure the deal and make an offer. So we talked about structuring the deal earlier on, and so that's where you have those discussions with the sellers. This is what I can offer. That's what you can offer. This is the additional things I can talk about. And there is a vast amount of options that you have in defining or discussing what that deal could look like. And then you can make an offer for such a business. For that, then you need to raise capital or not, depending on the structure of the deal that you have. And that depends on how you've structured the deal, right? So we talked also about raising capital with the bank and how you can make that happen. Then you can define your engagement level. Do you want to be the owner and the manager as well, in terms of CEO, and be in the game as well? Or do you just want to be an owner and invest and just be the investor, which means that you have a management team that's working to manage the company for you? So you have the options to have those discussions and make it happen. And then you have the option to just buy it and sell it. There are people in the business of business acquisition. So I buy a business for $500. After 6 months, I put it on the market as well, and I now sell it for $600,000. Because if you can convince people that this business is worth it, people would get someone that would buy it. So there are people that are actually in that business. That's what they do. They buy and sell businesses. Actually, what I've also heard is a guy that bought 4 businesses, merged them together, and sold them together as a company to a higher bidder. For example, Apple will buy another company. So if a smaller company is making in revenue 1 million, Apple will be ready to buy it in a multiple of 10, and that's a known thing. If you check online, so Apple would offer 10 times the revenue of any valuable small company, basically, especially if it's competing with them in one aspect or the other. So you could buy then 4 businesses that is doing $250,000, for example, merge them together, and together they have a value. Roughly, it's not always a multiple, but roughly it comes to $1 million. And then if it's valuable enough, that can be pitched then to Apple, and Apple buys them for 10 times, that. And now you see how you've made just smaller investment of 250,000 into an investment of 10 million, or into revenue, or into, that would be total revenue of $10 million. And these are the possibilities. So there are people actually in that business of acquiring businesses, merging them together, selling them for a higher price, and all these kind of things. These are possibilities, right? It's not necessary that this is what you want to do, but it's important that you're smart enough to understand how the business world works and the options you have if you're not ready to start a business.